Okay, so I am very sorry for that. I was unable to. I did not. I forgot. I didn't even know the. This is a continuation of the last market structure video. Um, Unfortunately, I have just a 20-minute limit, time limit to work with. So I wasn't even looking at it. I didn't even know I had taken 20 minutes, exactly 20 minutes, just to discuss the uptrend aspect of a trending market. And I was busy talking for I think almost 15 minutes. I didn't even know, only for me to realize that I was done. I had to just, play back and realize that I just all my talk for 20 minutes was just on the uptrend. So I'm seriously sorry. I never wanted to upload multiple videos, but that is what I have access to. I've been allotted only 20 minutes to do my talking. So you can see how challenging this is for me as well. So I'm going to try as much as possible to, you know, speed things up. I'm going to be super fast to the best of my ability. I'm not the type who knows how to summarize very well, but I'm going to try as much as possible to do that. So no more too much talking. I'm just going to jump straight and make up for all the remaining parts of the market structure video. So back to the presentation. So oh my god, so all these things were not captured. So sorry. Okay, so for a downtrend, it's just the reverse. So you're gonna be having low low followed by a high low and then a low low. So high low, low low. So once this is established, the very first part, this, this is the start of a downtrend. And then once this happens successively, then this is the continuation of the downtrend, which means we are now in a proper or more established downtrend. And so that is why um that is just that for the downtrend. So for in the case of a downtrend, when you're supposed to be having let me erase this. Let me erase all this. Let me erase all this. Let me erase all this. So you can see it clearly. Good. So in the case of a downtrend, when you have this is an impulse move for a downtrend. This is a pullback. Pullback. This is a pullback. Let me use my mouse. Okay, so this is an impulse move for a downtrend. This is a retracement or a pullback, followed by another impulse move, retracement, impulse move. So that is just it for the downtrend. It's just mirror version of an uptrend. You know, it's basically the same concept. So that is it for a trending market. Then the second market structure that any asset could be experiencing at any point in time is a ranging market, or what we refer to as consolidation. Most times, like in the forex market, I think virtually in every market, about 60 to 70% of the times, markets are usually said to be in a consolidatory mode. Then 30% of the times, that's when you see market trending. How true that is, it's not really applicable to all markets, but I think I'm pretty sure it happens very well in the forex market. I think the crypto market is still young relative to the forex market, so it is still too early to maybe see those signs. But I think it's also applicable to the crypto market. But that's a topic for another day. So let me erase this as well. So let me clear up the screen so you can see what a ranging market looks like. So if you remember very well in my previous video, I talked about a ranging market. I said Bitcoin was in a consolidatory mode. It was in a consolidatory mode between two key levels at a macro level, between two key levels, a 42K region and a 30K region. So that means uh, prices will just be moving. They are not prices are not trending. They are not trending up nor downwards, but they are rather within two horizontal boundaries of this uh, areas of these regions, the 42K and the 30K. You can see from after the May 19th crash last month, today makes exactly for 28 days, that's 4 weeks. Markets have just been consolidating between these two levels. They will manage to go up and then they will come down to this area again, more like an area than a level. The 30K level, a region or area, then it manages to go up again to the 40, 41, 42K region. Then it comes back to the, you can see another bounce back to the 30K region, which happened last week, exactly to 31K, and then it up, bounced off that level again, upwards to the 42K region again, and then it beginning to this serious resistance at that level, and then it's beginning to show signs of a bounce back again to the downside. So that is a consolidatory state. So I've seen so many experts, acclaimed experts, uh, confused, saying things like, okay, when the moment they see markets getting close to the 42K region, they are already making whole lot of force and noise, and then setting targets and all that as to higher side upper upsides, higher upsides to upper upside target as to where the market will be going to 46, 47, 51, not knowing that the market has to break through this consolidation first. So where the market will break through cannot be ascertained at the moment. So you can only wait and see where the market, let the market play out. It could be to the upside or to the downside. At the moment, no one knows. That's why it's called consolidation. No clear direction until there's a breakout. So this breakout could happen either above to the 42K, at the 42K level to the upside. If it does that, and then this is properly defended by the buyers. That level is properly defended, as in there is no daily or weekly or monthly close to the downside of the back into the consolidatory area. If that level can hold well as support by buyers, then there's a chance of the markets bouncing back to the upside again. Having a bullish or green momentum again. But if the reverse is the case, if it closes below the 30K level, then that is an indication that sellers are going to take control. It could send prices further down below to um, 20, 20 something K, more lower prices as a result. So that is it for a consolidatory or ranging market. The last type of market structure is a choppy market. Many people refer to this as consolidation, but it is not consolidation. It is actually different from a consolidation. So you need to be very careful when naming, referring to this market structure nomenclatures. It's a consolidation. A choppy market is actually a sideways market. Where you have market, they are neither trending nor ranging. They are not, consolidating between any two horizontal boundaries. Neither are they going up nor down. They are just sideways, side by side. Whereby you can see here, you have. So remember in my last video, I made mention of the fact that the Bitcoin market is currently in a consolidatory level or ranging state at macro level between the 30K level and the 42K level, and it is choppy in between at a micro level in between these two key levels of 30K and 42K. So you can see in between that we have Today, a red candle, tomorrow, a green candle. It's not, it's just by the side. It's not actually down or up. It's not up. You see the red candle forming the following day, still by the side. Then you now see a little bit of uh, consolidation, or something that seems like a little bit of a mini downtrend, which is actually consolidation to the downside, and then you see consolidation to the upside again, and then you see consolidation to the downside, and then in between again you see some sort of little choppiness, green day, red day, green day, red day, just by the side. So this is where many um traders, even newbies and experts alike, get carried away when they see a green day and they are like, oh wow, are we back? Are we back? Seems like we're back. And you see people setting targets as to where the market is going to be going, to the upside. And then I try to educate them to the best of my ability, letting them know that no, this is actually a state of choppiness. They set target only to get disappointed the following day that the markets have closed on a red note, and then back to the downside, and then the following day it seems like the market is up again. So that is what a choppy market does. So a choppy market is not advisable at all. It's not advisable to trade a choppy market. It's the dangerous, it's the most dangerous market to trade in, because no clear direction. There is no trend, no um, range. So it's just side by side. So you can imagine how frustrating it would be if you enter a trade today with the hope that the market is going up, only for it to go down the following that, then it comes back up again the next day. It shows signs of coming back up. So it's a frustrating market to trade in. So it's advisable to stay off the market until it gives you a clear direction. A ranging market, on the other hand, would uh, range between two boundaries. So it's also not, if you have to be a very good expert scalper to be able to do that. You need to be able to time your entries um, at the originating and terminating points of the upper and the lower boundaries. You need to be a very good expert trader to be able to time that. Otherwise, it's also advisable to stay clear of a ranging market until the market breaks out of that consolidation and gives you a clear direction as to where it wants to go before you can. It gives you an all clear signal for you to know where it's going to face, the direction it's going to face, so that you can confidently enter the markets. So that is it for market structure. So I hope that this video makes sense. I don't want to make it, it's already too lengthy. I'm sure this is over 30 minutes combined. So I hope this makes sense, and I'll be, if this makes sense, I'll just do well to hit the like button and smash that subscribe, hit the like button for me, smash the subscribe button. Let me know what your thoughts are as well in the comment section. Don't forget to share the video as well. And then if you um whatever it, if you have any challenge with it, you can also as well let me know your thought, your queries in the comment section. I'll be happy to respond them. If you have access to me personally, you can as well reach out to me, and I'll be happy to help. So thank you very much. The link to the previous video will also be in the description section, so you can as well click that. The first video and then the first part of this market structure video will also be in the description section, so you can as well click that to see it for your reference. Thank you very much. God bless you all. Trade safe. May the both be with you. Bye bye.